Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into next week, what do you need to be aware of? Well, of course, last week we did see again commodity prices surging across the board, with everything from metals, energies to agriculture markets trading near multi-year highs. In fact, last week iron ore prices, they broke above $200 a ton for the first time ever, whilst palladium prices, they broke above $3,000 to hit an all-time high. Now elsewhere, copper prices, they soared to a fresh 10-year high, and they've now then doubled from the lows seen just 1 year ago. The bullish momentum also split over into energy markets, with Brent crude oil hitting $70 per barrel, whilst WTI crude oil also rose to $65 a barrel. In the precious metals, gold posted its biggest weekly gain so far this year, climbing over 700 points to break above 1,840 US dollars per ounce. Meanwhile, silver prices, they jumped 6% to post their biggest weekly gain since February the 1st. In total, through 27 commodities ranging from the metals to energies to soft commodities, they've all posted double to triple digit gains since the beginning of this year, and we're still only at the start of a new commodity super cycle. Crude oil, iron and copper, they're up 265%, 249% and 87% respectively, whilst lumber prices, they've significantly risen from their 2020 lows to post an impressive gain of over 500%. There are plenty of reasons why commodities are on the move, but the key driver is the vaccine-led recovery, fueling massive amounts of global stimulus into green energy and infrastructure projects. This is against the backdrop of a tightening supply across many high-in-demand commodities, which indicates that the new super cycle is now firmly underway. During the previous super cycle in the early 2000s, commodity prices posted a whopping gain of 3,500% within a 10-year stretch. Many of the world's leading investment banks, including Goldman Sachs and Bank of America, they are predicting commodity prices will quadruple over the coming years and continue to break fresh record highs as the new supercycle continues to gather pace. Now, looking ahead to next week, the biggest market moving events that traders will be watching closely for clues on the market's next big move, those will include consumer price inflation and producer price index data. Consumer price inflation is likely to jump to close to 4% as prices in reopening economies, they contrast starkly with those from 12 months ago when the economy was in lockdown. The jump in prices will keep the inflation debate alive as the Federal Reserve maintains its stance that any inflation this year will be transitory. If the month-on-month inflation numbers start to pick up steam, that's definitely not transitory and creates a big problem for the Fed. Now, this in turn adds further fuel to the commodity super cycle. So whichever way you look at it, the case for commodities in a well-diversified portfolio has never been more obvious than it is right now. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Firstly, moving over to copper here. Our first position on copper actually hit target last week on Friday, and we still have another position running, which in total, those two trades up over 1,350 points now. So for every one lot that you would be trading, that's $13,500 profit, and for every 10 lots that you would be trading, that's $135,000 of profit that we benefited from with our members at the Gold and Silver Club for copper. Now, of course, we've been discussing this opportunity with you since April here, where we've been buying into all of these dips. We talk you through the narrative of all the infrastructure spending that was coming, the green energy policies, the big push towards electric vehicles. This will all benefit copper, and copper has now broken out to all-time highs. As you can see, in the last week, it's up over 6%. In fact, had a 3% move to the upside on Friday. So I do hope that many of you have been able to capitalize on this very large breakout that we've seen now over the last month. Copper prices have doubled in the last year since the lows that were put in during COVID-19 lockdowns, and since then it's been a phenomenal opportunity to keep buying this market on dips. The most recent significant pullbacks that we saw were at the end of March and into April, which we highlighted with you on the week ahead commodity reports at that point, that you could look at opportunities to buy in, that we continue to build into our position, and now we're taking a bit of profit off the table, banking into strength, but we still remain with our position in copper with some profit taken off the table. Now, if we move over to silver, this is another market that we've been highlighting with you since the end of March, beginning of April, as levels that you wanted to really be accumulating and building further positions on this market between 24 to 25 US dollars per ounce. This was at a point where many technical traders and retail traders were panic selling out of their position right at the end of March, where all we saw at that point was a rebalancing of portfolios, end of quarter profit taking, and then of course we had the speech by Joe Biden regarding all of the infrastructure spending that was to come with a new quarter as well. So the very first day of April, we saw fresh capital come right back in the market. That marked the low for silver, which we went through in detail with you at the time on gold and silver asset of the day. There was a massive opportunity to buy gold sub $1,700 per ounce and silver between $24 to $25 per ounce. Now, of course, into Friday's close, silver is closed at $27.43 per ounce. Silver right now is our biggest position in the market. We've now actually built into 7 positions. We added another trade last week and a trade the previous week as well. So we continue to build each week into this position. Silver prices last week, they're up just over 6%. And you can see here where we've had a very strong close at $27.43 per ounce, following on from Friday's non-farm payroll. And we are essentially expecting higher prices over this month of May. So we've added again another position in the last week. Then if we look over to gold, gold prices have now broken out to 2.5-month highs. We actually raised our profit target twice on gold over the last week. Again, we like to bank into strength. We took some profit off the table. We still remain in gold here as we go into next week. Gold has closed here at 1,830 US dollars per ounce. Again, we identified with you great buying opportunities below 1,700 at the end of March, beginning of April, where instead of panic selling out of your position, you wanted to be getting in long. It was a gift to enter into gold at those prices. Gold has since rallied over 1,400 points. We've been able to capitalize on this move to the upside. We still have exposure to gold. We took a bit of profit off the table last week. We also mentioned to you at the beginning of last week the watch out for counterflow with the UK on bank holiday last week on Monday, and China as well on their Labor Day holidays up until Wednesday, and Japan on holidays as well. You could see some pressures to the downside at the beginning of the week and you want to buy into dips. So we saw exactly that last week. You can see where we had the dips at the beginning of the week, which gave you opportunities to buy in, not only on gold, but also on silver as well. With the pressure to the downside that we saw at the start of last week, that was the great opportunity for you to add further positions on your trades. And again, what tends to happen now that we've had a lot of the move over the last few days, a lot of traders start to buy in too high into gold. They get their delayed confirmation. We've been very early to these trades. As you know, we've been talking you through this each and every single week on our week ahead reports and also on gold and silver asset of the day, how we're building into these positions. But often you see a lot of technical traders, retail traders now start to get very late into the move. And this is where often they can get liquidated because they're not entering in at the correct times. They're not waiting for the dips in the market. They end up buying too high and then getting prematurely liquidated, and then they end up panic selling at the lows like we saw back at the end of March and beginning of April, which in actual fact were a fantastic opportunity to build your position further, like we also did with platinum as well. So we still maintain our exposure with platinum. We haven't added to this in the last week. We've added more exposure to silver in the last week, but we still have our positions running on platinum here as we go into a new week as well. And then finally, just moving over to another market I'll put on your radar, palladium prices. They broke out to all-time highs last week. We are actually looking for corrective price action over the month of May for palladium. It often can put pressure on this market, which would set up for further buying opportunities. So I just put that on your radar, that palladium is a market that we are looking to buy into dips over this month, and we're starting to see corrective price action here. And you're also seeing strength on the precious metals such as gold, silver and platinum, but palladium is starting to decorrelate, which it often does over May, and we're looking at weakness to provide us with opportunities to build further positions in this market. And finally, moving over to energies as well, we remain long. We built further positions at the end of March and beginning of April. We've seen another large breakout to the upside into Friday's close, just under 1% move to the upside, 4% gain here, and of course again breaking out above the highs here that we saw back in March. Energy prices are up over 265% since the lows of last year. Energies have been a phenomenal market to continue to capitalize on the super cycle that we're seeing in commodities right now. So with that, if you would like to capitalize on commodities at the moment, particularly if you've seen a lot of choppy price action in the way that you might be trading, we've seen that a lot with retail traders out there. So really the approach that you want to be utilizing in these markets to capitalize on the bull run that we're seeing at the moment in this commodity super cycle, you want to be looking at data, market intelligence, statistics, facts in the market. You want to be trading with a research-driven approach as opposed to using outdated technical analysis or gimmicky indicators which do not work, and you'll end up getting chopped up a lot. You end up FOMOing in, buying too high, and you'll end up panic selling out of positions as well. And ultimately it ends up being death by 1,000 cuts as you can't gain any headway. You want to make sure that you're regularly building, bricklaying your account and compounding your returns. So with that, if you would like to learn that research-driven approach, you want to be trading the same way that the hedge funds, money managers, banks and institutions are, understanding capital flows in the market alongside the seasonal playbook, very specific times of year that are more favorable for some commodities versus others, also the exact points of execution, and also taking profit off the table. It's just as important to know when to bank your profits as it is when to get into trade. So the key areas of liquidity, alongside that understanding the daily, the weekly, the monthly cycles in the market, the intermarket correlations, capital flows, very important, the sentiment, and layer in on top of that your understanding of macroeconomics, intermarket correlations, the ratios in the market, and of course exactly what the hedge funds, money managers, banks and institutions are doing. That will help you massively to get an edge. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.